Onto the big CNBC-TV18 exclusive interview. The 3,600 crore additional provisioning made by the country's largest private sector lender in the fourth quarter may have dented its performance, but it will go a long way in ensuring that the pain does not spread across the coming quarters, that is. Now, that's the argument being put forward by Chanda Kochhar. Speaking to CNBC-TV18 Latha Venkatesh, the MD and CEO of ICICI Bank says that this provisioning doesn't necessarily mean that the entire stress exposure will slip into the NPA category. In fact, Latha started off by asking her about the rationale behind providing this amount in the fourth quarter.
What we have disclosed is really a further drill down disclosure on our assets.
Yes.
So we've not really called it, that on a subjective basis whether this is watch or not, but what we've said is that there are 5 sectors today that have been clearly impacted by the global commodity prices and by other economic conditions, and all the portfolio that is below investment grade internally classified. So we have just given more details about those, and that is really the list of the portfolio. We've added the fund and non-fund based exposure. It's across our domestic book as well as the international branches, and it covers all the below investment grade. There's also a fact that we have an action plan around each of those companies. We are working on resolutions with the promoters for them to either sell their core assets or their non-core assets to reduce their leverage, because of which some of these exposures for us will go down, some of them would move to better rated entities and so on. So I think there's a very detailed action plan. But at the same time, we have to remember that in today's day and age, the action plan takes time to materialize. And therefore, we have disclosed these details. I think beyond this, it's not possible really to say what out of this will flow into NPAs and what out of this will not flow into NPAs.
No, not what. It's only a ballpark. Axis said 60% would be the outer limit. They don't believe it is going to be 60. So if you can guide on those lines.
So actually, as I said, resolutions are on for many of these exposures. Some of these are actually large exposures for which you would have read, reports about deals being done, sales being, finalized, and so on and so forth. So we are actually very hopeful that some of those resolutions would work out. But at the same time, as I said, in today's day and age, even after, you find a buyer, first of all, when the promoter agrees to sell, with the low commodity prices, you have less buyers today than sellers. Secondly, even after the buyer is found, you need to go through the court approvals, the competition commission approvals, and so on. So that could take, different points of time. And then during that period, the regulator has the approach of early and conservative recognition.
Yes.
So that's why I'm saying it's difficult to say what part of it, and it's better actually not to say what part of it. But we do expect resolutions around many of these cases to happen actually.
All right, that was a big CNBC-TV18 exclusive